Hello and welcome to this edition of the Market Share. I'm Paul Gifford, Chief Investment Officer at First Source Bank. Joining me today is Jason Cooper, one of our senior portfolio managers. Jason, the Federal Reserve just got done meeting this last week, and they announced that they weren't going to change interest rates, at least this meeting, likely to increase it one time in the next two meetings they have this year. There continues to be a couple numbers that the Federal Reserve is looking at. One is related to unemployment and inflation. Let's kind of talk a little bit about that unemployment number, the personal consumption index, and the consumer price index.
Okay.
Can you share some information on where that's at today?
Yeah, that's a big data point, and with inflation still higher than what they would like it to be, the question is, what is this PCE we hear so much about, and why does the Fed use it? PCE stands for personal consumption expenditures, and really it gets to the point that the reason they use this is because it's much better in terms of getting a good basis to use when it's trying to figure out how much prices have been going up. So they like to use the PCE versus the CPI. On the slide that I have for today, you can see that we are starting to see the trend decline, which is great, but we aren't near that 2% bogey that we hear so much about. There's been a lot of talk about maybe changing that, going back or going higher to 2.5%, 3%, but the Fed, Jerome Powell, has been adamant to say 2% is the number. And so you can see in this chart, the trend is declining, but we certainly aren't there yet.
Yeah, that seems to be a little ways away, in fact, on the inflation number. Jason, we're kind of in this quiet period. We just got done with a big two-day Federal Reserve meeting, and we're still like 10 or 15 days away from corporate earnings going on. What are some of the economists forecasting now while we have this quiet period kind of making the news?
Yeah. Well, as Paul said, there's still priced into the market a 25 basis point increase for this year. So the big question is, when do they start cutting already? That's already been the topic of discussion. And so in this slide, the reason I like this is because it gives you an indication of what economists are saying from Bloomberg that does the survey. And it shows that they are planning to have some type of a cut next year. We don't know how much. We've heard everything from 50 basis points to 100 basis points, but it looks like indications are it's going to be declining at some point in 2024. The other nice thing about this chart is you can see that a lot of the economists do believe we will get to the 2% bogey that I spoke earlier about with PCE, which is good. And that means we'll probably continue to see rates drop from the Fed.
So our big challenge is, how fast does both of those happen? How fast does the Federal Reserve have to go to cutting rates, and how fast do we really get to 2%? And at the moment, the economists are thinking it's still another year or maybe two away before we get to the 2% on inflation. So Jason, really appreciate your thoughts on inflation and the current economic outlook from the Bloomberg survey. If this is your first time watching the Market Share video, we encourage you to subscribe. And if you found value in the video, we encourage you also to forward that on to your friends and family. And as always, thank you for the opportunity to serve you and your family, and have a great day.